Two retirees can have the same income, the same savings, and the same lifestyle, but one keeps thousands of dollars more every year simply because of the state they live in. It is the invisible wall between a comfortable retirement and a stressful one. Most of the time, people looking toward their golden years focus on the obvious things like finding the perfect beach, staying close to family, or checking the local housing prices. They completely ignore the state tax system until it is far too late to change their minds. You might think you are moving to a paradise, but some of those popular retirement states are not always the cheapest once you look at the fine print. We are talking about the hidden costs of property taxes, sales taxes, estate taxes, and complex rules regarding retirement income. Stay until the end because the worst state on this list for 2026 is not the one most people expect to see. Before we dive into the rankings, we have to establish the rules of the game. We need to define what actually makes a state good or bad for retirement tax planning, because it is not just about whether a state has an income tax or not. To get a real answer, we have to break the comparison into 6 specific categories. First, we look at Social Security taxation. Next, we analyze how they treat pension income. Third, we look at the tax rates for IRA and 401k withdrawals. Then we have to balance that against property taxes, sales taxes, and finally, estate or inheritance taxes. A state with no income tax can still hurt your wallet through high property taxes, skyrocketing insurance costs, or a massive sales tax on everything you buy. This is a tax-focused ranking designed to show you where your money goes furthest, not a full lifestyle ranking. Go ahead and comment your state below right now, and by the end of this video, you will see if your current home lands in the safe zone or the danger zone for 2026. Many people make a massive mistake when they start looking at these numbers. They ask one simple question: does this state tax my Social Security? While that matters, it is only one tiny piece of the retirement tax planning puzzle. If you are a retiree who has a pension, significant IRA withdrawals, or a taxable brokerage account, you are facing a completely different financial reality than someone who only relies on Social Security. Imagine a retiree who withdraws $40,000 a year from a 401k, receives $28,000 from Social Security, and owns a home worth $350,000. That person might not care about Social Security taxes at all if the state is going to take a huge bite out of their retirement account withdrawals or hit them with a massive property tax bill every single year. You have to look at the total interaction of your income sources. Now let us start with the 5 states that give retirees the cleanest tax setup in 2026. And then we will flip the script to look at the 5 states that quietly take the biggest bite out of your savings. Starting the list of the best states at number 5 is Nevada. Nevada has long been a powerhouse for those looking for tax-friendly retirement states because it has no state income tax at all. This means your Social Security benefits, your private pensions, and every dollar you pull out of your IRA or 401k remains untouched by the state government. On top of that, property taxes in Nevada are generally lower than the national average, which is a huge relief for those on a fixed income. However, you have to maintain some balance in your expectations. Nevada makes up for that lack of income tax with higher sales taxes, and if you choose to live in a high-demand area like Las Vegas or Reno, the cost of living might be higher than you anticipated. Nevada is fantastic for protecting your monthly checks, but the next state on our list might be even stronger for retirees who value simplicity above all else. 4th best state is South Dakota. Hard to beat is this state's low-tax retirement structure. No state income, Social Security, or retirement withdrawal taxes apply in South Dakota. The lack of estate and inheritance taxes attracts parents who want to leave a legacy. A clean tax picture makes it easy to manage as you age. Lifestyle is pragmatic trade-off. Climate is harsh, rural healthcare is poor, and it lacks big city advantages of other states. The list is noteworthy since retirees who dream in Florida or Texas occasionally neglect the next state. Wyoming ranked 3rd. Wyoming appears to be a tax-friendly retirement state. State retirement income is tax-free because there is no income tax, no estate or inheritance tax, and low property taxes in Wyoming. It hides taxes for hardy people. This warning is useful. You may not like Wyoming if you need major city healthcare, pleasant weather, or lots of entertainment. Wyoming wins on tax, but the following state has an income tax but retirees can profit. Mississippi ranks 2nd. Generous retirement income exemptions distinguish this state. Mississippi rarely taxes retirement income. These include Social Security, qualifying pensions, and retirement account distributions. Since it has lower property taxes than most of the country, living there is affordable. The negative is that Mississippi taxes groceries and other goods. Mississippi can enhance your finances if you own a small home and rely on retirement. Florida's 2026 retirement taxes are best. The most famous winner has a goal. States without income taxes exempt Social Security, pensions, IRA withdrawals, and part-time work. No estate or inheritance tax in Florida, but Florida's reality must be acknowledged. Some neighborhoods have high home insurance, property values, and HOA fees despite low taxes. These factors can quickly reduce tax advantages if ignored. Some desirable retirement states are expensive after taxes on pension, property, and estate. The fifth poorest state in 2026 is Connecticut. This state's high cost of living and income-based tax regime make retirement difficult. Despite income-based exclusions, higher-income seniors will pay state taxes on Social Security disbursements. Connecticut's pension and hefty IRA withdrawal regulations hamper retirement. Connecticut wants your success and savings. Although Connecticut is horrible, retirees overlook the next state because it seems moderate. Fourth worst, Rhode Island. High taxes in this little state? Retirees must consider income limitations. Lower earners may be barred from Social Security, but many retirees may pay more than expected. With high property taxes and retirement income restrictions, the burden is severe. In Rhode Island, the question is how your final tax burden is calculated when all your income is pooled, not whether they tax Social Security. Vermont is third worst, one of the few states that taxes Social Security benefits by income. Large property taxes and personal taxes plague it. Vermont is peaceful, but moderate to high-income retirees struggle financially. Our next state is a trap because even the lowest tax band is high. Second worst state is Minnesota. Retirees struggle because the state taxes practically all retirement income. Social Security, pensions, and 401k distributions may be taxable. Minnesota has one of the highest estate and income taxes. If your retirement plan relies on traditional IRA withdrawals, Minnesota tax planning must be excellent to survive. Finally, California has the worst retirement taxes in 2026. Though obvious, it's the most significant warning. California taxes practically everything except Social Security. Pensions and retirement account withdrawals are completely taxable at some of the nation's highest progressive rates. These income tax rates, high sales taxes, and the legendary cost of housing rarely favor retirees. California may not tax Social Security, but it might tax your retirement lifestyle. Honorable mention for worst retirement state also goes to New Jersey, whose property taxes are highest in the nation, and state income taxes are also a huge financial burden. Let's examine some secret winners who qualified for honorable mention but didn't make the top 5. Texas has no state income or estate tax, but their property taxes are among the highest in the nation, so be careful. Tennessee has no state income tax but a high sales tax that affects daily expenditures. Recent tax adjustments preserved retirement income, making Iowa a hidden jewel, but property taxes remain an issue. Retirement and pension benefits are becoming exempt for many people, making Michigan more appealing for 2026. The lesson is to not follow the crowd. Before packing, make a brief list. Consider how much of your income will come from Social Security, a pension, or an IRA. Consider buying or renting and investigate property tax rates. Consider whether your estate is large enough for state taxes. Last, ask yourself if moving for taxes or healthcare and family connections is worth it. Your retirement tax bill depends on how your income, house, spending, and estate costs interact. To summarize 2026 retirement tax rankings, Florida, Mississippi, Wyoming, South Dakota, and Nevada are best. California is the worst, followed by Minnesota, Vermont, Rhode Island, and Connecticut. These rankings are all about money. Being close to your grandkids or favorite doctors may make a high-tax state the better choice. Tell me if your state is best or worst below. This breakdown may have saved you from a catastrophic financial blunder. Please comment below what state do you live in and where do you plan to retire. Please subscribe to this channel and like the video so that this information is provided to others needing financial advice. Hit the notification bell to never miss a video helping you to navigate retirement-related finances.